Hello, everyone. My name is Amy Harder. I'm joining you from Seattle, Washington. I hope wherever you are joining us from today that you're doing well and looking forward to a fun weekend after a wonderful conference. I'm executive editor of Cypher, a brand new publication by Breakthrough Energy. We're covering the technological transformations that we need to tackle climate change. Cypher means zero, as in our collective goal of zero emissions. We just launched a few weeks ago, and you can sign up for our news updates at cyphernews.com. So I've been a journalist covering energy and climate change for more than a decade, with stops at the Wall Street Journal and Axios before launching Cypher. And if there's one transcendent thing that I've learned over this time, it's that climate change connects literally everything and everyone, which is why I'm particularly thrilled to be moderating this panel that brings together a wide cross-section of experts to talk about how collaboration across different sectors can help us tackle climate change and is in fact essential to do so. We'll need financial instruments, legal frameworks, new physical infrastructure, new materials, and new technologies. We need the policies and the politics in lockstep as well. And perhaps most of all, we need this all to happen fast, far faster than the transition is happening currently. And to discuss all of these and how they overlap, we have the following esteemed panelists joining us today. We have Arlene McCarthy, Special Advisor to the Chairman of Bloomberg on Strategic Affairs and Special Advisor to the Bloomberg Philanthropies team on climate finance, and environment programs. We have Philippe Varin, CEO of the Suez Group and founder of the World Materials Forum, and Ken Rivlin, a longtime partner at Allen & Overy, who heads their international environmental law group. Unfortunately, Werner Hoyer, president of the European Investment Bank, will not be able to join us today, but I have no doubt we'll have a wonderful conversation and can bring him all the questions we have for him after the fact. Just a few housekeeping items before we get started. This panel runs for an hour and ends at 1/2 the hour. We'll have a discussion among the panelists, and then toward the end, we'll turn to questions from the audience. So please be thinking of questions you'd like to ask. You can use the live chat function on the platform anytime to ask a question. And please make sure to specify who the question is for. We also invite you to share your thoughts online with the hashtags Paris Peace Forum 2021 and Solutions for Peace. And so I want to give each of you sort of an opening question to give you a chance to offer your perspective on the state of play following the imminent ending of COP26 in Glasgow, Scotland, and other related items. Arlene, why don't we start with you? Everyone seems to be putting forth net zero goals, raising some concern about whether these are legitimate goals. How do we make sure that these lofty goals do actually become a reality?
Well, thank you, Amy, and it's great to join you and the panelists today. I mean, I want to start off on a very positive note. I think we're on the right track. I think that most of the world's and most of the countries in the world have made the commitment to net zero. We've got lots of companies who are in the process of either introducing net zero strategies or they already have a strategy. And we know that every sector across industry will be impacted. And so I think for us, certainly in Bloomberg and for Mike Bloomberg and the work that he's been doing, particularly with the former Bank of England governor and now UN Special Envoy for Climate Finance, Mark Carney, for us really disclosure and reporting is critical to any strategy around achieving net zero. And when I say disclosure and reporting, we also need to have very good quality and timely information from companies. We need to have the global capital markets need to move towards global standards in this space. And I think that is happening. We're seeing TCFD has proved itself to be a very effective global disclosure framework. It's been adopted by the G7, the G20. That's just recently, within the last year. Policymakers, supervisors, the group of central banks for climate have adopted this framework as their disclosure regime. And if you think that that represents a market cap of around $26 trillion, then I think you really can make big headway here, and you can go further and faster. It enables, if you have good disclosure, it enables investors and lenders, insurance underwriters to price climate change impacts. And the more you drive that momentum, the more you'll begin to see capital shifting to companies that are prioritizing resilience and sustainability. And then again, I think you're going to get fast results in seeing, bigger increases in sustainable investment. And, again, I think at UN COP, we saw the finance sector stepping up. They definitely are stepping up now in a much bigger way than they've ever done. We saw that the Glasgow Financial Alliance for Net Zero, again, which Mike and Mark Carney are pioneering together, and that's building on disclosure reporting. So you have a pyramid that's all going in the right direction with the private sector. Is that we have something like 450 finance institutions already signed up. That's growing. It's in 45 countries. Again, that represents $130 trillion in assets. So I think the finance and corporate sector has a key role to play here. It has to collaborate with governments and policymakers. It's a part of the solution. It's critical to driving the mobilization of private finance. But I'm very optimistic. And I know that we can always do more and we can do faster, but I think all the signs are good, the trend's in the right direction. And as you said, Amy, from the outset, it is about, in lockstep, collaborating, cooperation, and I think we can accelerate our ambition in this way.
Great. Thanks so much for those thoughts, Arlene. We'll come back to some of the themes you talked about in just a minute. I would love to go now to Philippe. So you wear two hats, CEO of a major resource and waste company, and also founder of the World Materials Forum. Can you tell us a little bit about this forum and how your thinking has evolved on climate change from these two related perspectives?
Yeah. Thank you. And as you mentioned, I chair Suez, and just in 1 minute, Suez is involved in water management and waste. It's a 20 billion euros company, 90,000 people. I think what is very important is that this questions of water and circular economy is at the heart of the climate change matter. So it's very important that we are really focusing on solutions. And the goal of Suez is really to have, in 2030, 100% of our new products and services are sustainable solutions. And we have been validated, our approach has been validated to 1.5 degrees by the SBTi. And more of everything is that our employees are fully motivated. It's in our purpose, and it's their daily job to find the new water networks to mitigate the climate change effects, be it warming, but also catastrophic events. Water is very important. And you know that today we have 2 billion inhabitants of the planet who live in a scarcity water environment. And there will be, in 2050, probably 3.5 billion of inhabitants. So it's a major issue. Coming back to WMF, indeed, the World Materials Forum that we convene every year since the last 7 years, it gathers 250 people, who are industrial leaders, CTOs as well, scientists, NGOs, and they are there once a year in Nancy to exchange about the way to decouple raw materials consumption and economic growth. And here, I would like to say everybody is thinking on the way to use materials smarter, less, and longer. You know what? Behind the climate change effects, there are two root causes, as you know. One is fossil energy, which is about 80% of the energy production, which account for 2/3 of the emissions of the planet. But also the second root cause is about use of materials. And as the Global Resource Outlook of the United Nations studied it, we use every year 100 billion tons out of the planet. We extract 100 billion tons, which is huge. Doesn't mean a lot, 100 billion tons, but they are responsible, according to the Global Resource Outlook, of 50% of the emissions of CO2 if you go from the mine to the product. And it's about, if you divide by the number of habitants, it's about 13 tons per habitant. And for the developed countries, it's closer to 30 tons per habitant or more. And it's a huge figure, 30 tons per habitant. But if you look at your smartphone, which weighs 130 grams, and you know that you must extract 70 kilograms of materials to make this smartphone, or if you know that you use your car, which weighs more than 1 ton, more on footprint, obviously, but you use only 5% of the time, you see there are a lot of areas of progress. And in addition to, this is, if you want to have a view on what it gives in the next 30 years, have in mind that we are going to extract from the planet as much in the next 30 years that since inception of humanity 4 billion years ago. So it's a huge challenge. And if you look only on the materials for ecological transition, the copper market is going to double in demand on the next 10 years. Lithium is going to be multiplied by 4, and the nickel demand is going to multiply by 3. So the question is indeed, in this situation, and it's a very topical matter for our Paris Peace Forum, because the world governance on this matter is not very strong. And we cannot rely on GDP measurements because GDP is not a proper tool. If you have a pollution, in the GDP you add it as added value. So the problem is that market economy has forgotten nature somewhat. So the GDP is not the right compass for all of us. So, and the level playing field approach that we are all promoting has been some limits during the 10, 20 last years with the OPEC, but we should not underestimate the risk that we have in the access to materials. So that's the reason why that's what we do in our forum, and it's about collective intelligence. So it's just related to the matter of our session today. What we do in concrete terms, we assess the criticality of materials. And on the table of Mendeleev, 7 years ago, there were 5 critical materials. Now there are 14, all the materials of the transition, ecological transition. We exchange on the proper KPIs to have the proper traceability, to drive the behaviors and to report. We exchange on solutions on a facts and figures basis. It's very important that we take not a passionate view. And so we look at the top 10 technologies that will underpin the change. So it's about batteries, recycling and performance, it's about hydrogen, it's about decarbonization of bulk materials, but also IT, quantum IT, spintronics, because digital is not for free and there will be a lot of emissions. So we have to improve the way we make the computing. And I must say, if the planet is our common good, we will have also to think on the way we address the IP issue in the future and the financing of the development of these new technologies. And we take with us also a number, we have 100 startups of the world working on these matters. So that's what we do in the World Materials Forum.
That's great. Thanks so much for that overview, Philippe. I would love to come back to you in a few minutes to ask a little bit more about how you hope that the world can effectively develop a lot of these minerals that we'll need to sustain the clean energy revolution. But before we get to that, Ken, I would love to come to you. You've had your hands in so many of these issues, and I know you're at COP26, so I would love to kind of get your overview. What is your view on how companies can meet their net zero goals, and how does ESG fit into this?
Sure. Well, first of all, I just want to say thank you. It's a huge honor to be participating with you today. And it was really inspiring to hear Kamala Harris and Macron and the rest of the government leaders who spoke at the opening yesterday. And I'd also like to comment on something that Arlene said. I share her optimism. I mean, we are at a tipping point as a world and as a society, and there are potentially tragic outcomes if we don't act. And I had an opportunity to speak with a number of the protesters when I was in Glasgow. And I have to tell you that they're extremely passionate. They were pretty skeptical about my own role, given that I work at a big law firm representing some of the largest companies and financial institutions in the world. But I think that their passion is playing an important role here. And it's playing an important role to get into your question in terms of what companies can do and must do to meet net zero. So, it really depends on the industry sector, the geography, a range of factors that companies and institutions are subject to. And one of the key issues is they need good data. And that's been a real sticking point. You need scope 1, scope 2, scope 3 emissions data. You need to understand all the way through your supply chain. And frankly, that's going to be a real issue. I mean, I agree with Arlene's point about all the financial institutions coming together and these new disclosure reporting rules being fundamental to how solutions are kind of put into place and verified. But we're not there yet on the data, and I view that as a real challenge right now. So what are our clients doing? What are companies doing? I mean, first, they're trying to grapple with this data issue. Secondly, they're really looking throughout the supply chain and thinking about not just what they're doing, what their customers are doing, what their suppliers are doing, and really trying to understand the full picture of their impact on carbon. Then you come to prioritization, and this overlaps with the whole ESG trend, which is really overcoming all of this, right? I mean, companies like Suez, which are doing such a remarkable job, have an infinite number of issues they could focus on, not just carbon, but racial justice and pay equity and gender equity and waste. There's so many issues that the real question is, where do you prioritize? Each one of them is critical, but how do we prioritize? So our clients are really trying to look first for key wins and then looking at innovative changes to process or using technology that can help them achieve real either carbon reductions or improvements on these other metrics around ESG. The key aspect of all this is that any changes, any improvements that companies or institutions make now, they have to be credible, they have to be based on reliable data, and they have to be verifiable. Because one of the overarching concerns that so many financial institutions and corporations are facing now is the risk of greenwashing claims and litigation one way or another. And hopefully we'll get to talk about that a little bit later today. But, those claims around greenwashing are completely legitimate. If a company or financial institution is going to make a claim about improvements, carbon reductions, any kind of change to their process that are meant to kind of improve the environment or reduce harms to the environment or to society, then they need to be able to back them up. And, being in a position to do that is absolutely critical. Let me stop there. I think the key thing that I want to pull out of all this is that, notwithstanding in the lead up to the COP, how I heard so much from folks I knew who were attending and who I met with in the first days there about their criticisms and skepticism about the ability of the COP to solve any of the problems that we're facing. I can't help but be optimistic about what happened and what's being reported there. And even though there are challenges to governance in COP, and we can talk about that today, I do feel now a sense of optimism about where we're headed.
Great. Thanks so much for those comments, Ken. I do want to dive in just a couple of minutes more into the sort of the acronym soup of all the standards and disclosure requirements that companies are wading through. But before we get into those weeds, I would like to go to a little bit more into COP26. And the one key important theme that I see emerging from this conference is that the rubber is really hitting the road when it comes to the divisions between developed countries and developing countries when it comes to finance and loss and damage and support for technological developments. And maybe Arlene will go to you first on this question, but please anyone jump in if you would like. How can we make sure that there is tangible, real progress on the climate finance part of this, and therefore make sure that we can try to correct as much as possible the inequities between countries that are still developing and should have the right to grow their economies in the best way that they can, while also making sure we make progress fighting climate change.
Well, I mean, I think it's a really important question. I mean, and it was the one issue I think at COP that everyone felt that the developing countries would come and say, well, what you promised, you didn't deliver. You were promised 100 billion, we didn't get the 100 billion. And I think that's probably because we overpromised and under-delivered, which I've always learned as a politician you should never do. If you never overpromise, under-deliver, what you need to do is be realistic about what you can deliver and how you deliver that, and And I think the key issue here that everyone has learned is that we now know that gap, that significant gap, particularly for emerging markets, will have to come from the private sector. That's why I think that the private sector stepping up now is both a reason for optimism, but it's also something we need to encourage more of. They have a key role to play. They have a key role to play, I think, particularly for those countries on energy transition, where there are really big opportunities for investors. And again, an example that I'm very familiar with, at the request of the UN Secretary General, Michael Bloomberg set up the Climate Finance Leadership Initiative. He pulled together 7 of the biggest CEOs of finance institutions. And the core purpose they had worked on for a year was a report looking at what were the obstacles, what were the blocks to investing in those emerging markets and developing countries, was really a way to try to trigger more private capital there. And the first country pilot that we just launched actually in October is in India. And there we're going to scale up private finance, and we're going to work together with domestic and international institutions, with the World Bank, with the European Investment Bank as well, for example. But if you just look at one sector in India, the power sector, it represents around 650 billion worth of dollars of opportunity. Now that's a big opportunity for the private sector to invest in, to support India on its green energy transition. So I think these are the kind of connections that we need to make in a way that we drive forward that mobilization of private finance. And in that way, we support those countries, you know, to go further and faster themselves, where they just simply don't have adequate finance to do that.
Great. Philippe, do you have any comments on this, given your company obviously operates around the world and the forum as well has such a global footprint? How do you balance the divide and the growing tension between the developing countries and the richer, more developed countries like the US and Europe?
Yeah, perhaps just two thoughts to add of what has just been said, because I think it's indeed a major issue in the implementation of the objectives of Glasgow. The first comment I would make is that if you want to be efficient, we have to be focused on the key areas where developing countries have to catch up quickly. And just 2 ideas here. I think if you want to focus on what is important, when you are aware that if you take bulk materials produced like steel, aluminum, cement in these countries, and when you know that steel is 9% of global emissions, aluminum is 4%, cement is 7%. So altogether, only of these 3 bulk materials is 20% of the emissions, and probably more coming from emerging countries. We should focus on this on this aspect. So one focus, and the other point of focus could be also electricity production, because you know that fossil energies is 80% of the mix of energy, and you know, coal, and this has to disappear as quickly as possible. So we should, on decarbonization of bulk and electricity, say here there is a global focused effort. And my second point is that we should use, in this context, find a way to much more use private financing. And here we have because you know, a number of states have public finances very stretched. with the current level of debt. And you cannot hope that we will, put this situation square in the next 5 years. But we must launch a number of infrastructure equipments. So private financing is absolutely necessary. And we need long-term private financing. And frankly, if we continue with the zero rate interest rates, I don't know how we can mobilize private financing to sort out the financing of these green infrastructures in developing countries. So there is an issue here, and it's a big cause of inequality because this, by the way, these countries cannot have access also to very low rates of interest, not like the big developed countries. So these are two ideas that I would bring to the table to try to sort out these inequalities.
That's great. Thanks so much. Ken, what's your perspective on this, and what did you see on this issue in COP26?
Well, I mean, the discrepancy and the differences between how developed countries and the developing world are dealing with this issue and suffering the outcomes are stark. And it drives also into the difference between the North and the global South, which is suffering disproportionately. I mean, that's absolutely a key issue. It's the reason for all of the tension around the $100 billion promise for adaptation funding, which has not really been delivered. Although I'm pleased to say that the U.S. is now committed to $3 billion a year itself going forward. So that's kind of really reassuring, and frankly, as an aside, and as an American, I'm pleased that the U.S. is back when it comes to climate, and so that's reassuring, very reassuring. We could talk about that further if there's interest. But I want to come back to one point that was just made about financing. So, the whole world of green finance, green bonds, blue bonds is exploding. And our lead made this point about the importance of deploying this really trillions of dollars, euros, pounds of capital that are available to kind of promote environmental goods. There's a lot of skepticism about this. I mean, if we're deploying money from investment banks and hedge funds and private equity funds, they're not going to do it without making a profit. And the question is, what kind of compromises are we making to make that happen, and are they worth it? And I had a lot of debates about this over the last week with folks who were skeptical about it. But my own view, and I don't know if it's colored by my experience or if I'm right, but I hope I'm right, and I think I'm right, is that we can't achieve what we're going to achieve, what we need to achieve on climate and on all these other ESG related priorities without the capital of the financial institutions and corporations and PE funds and hedge funds. And we need to find a way to make that work. So, this last week, I was involved in the new blue bond for Belize, which is a great example of kind of creative ways to find really two solutions. One is to kind of improve the financial state of government to reduce its debt load. And secondly, to assure that some of the funding that's used when doing that is going to either ocean protection or other environmental purposes. And this explosion, I mean, it's unfortunate that the EIB isn't here because they really kind of innovated and were the first movers on social and green bonds more than 10 years ago. But this is really where the action is right now. It's not the only part of the solution, but I think it's an important one. And for these solutions to work, it's the same point on just companies achieving their own net zero. Are the improvements or the benefits that these transactions are meant to attain, are they verifiable? Are they tangible? Are they real? How do we deal with issues of additionality? I mean, would these improvements be happening anyway or not? My personal feeling is that directionally we're moving the way we should be moving, and this use of capital in a way that is kind of achieving these goals is key. And the governor on this, the border, which prevents kind of improper behavior or ensures that these funds are being used in the right way and these transactions are what they're being described as is two things. One, it's what Arlene talked about in terms of the disclosure and reporting obligations and protocol, which are coming in, which Europe has been driving and which we expect the US to come on with requirements coming out of the SEC sometime maybe even this month. Right? It's really that, and then it's the scrutiny. It's the scrutiny from the top members. It's the scrutiny from the media. It's scrutiny from shareholders and investors. And together, I think that these really are leading us in the right direction.
That's great. Let's drill down a little bit more into the whole disclosure acronym soup world that I think both you and Arlene have talked about, and I'm sure Philippe, in the various hats you wear, this is something you're familiar with as well. Of course, the task force on climate-related financial disclosures, TCFD, seems to be the most popular one, but there's a lot of them. And I think the UN Secretary General said recently, perhaps last week, that now the UN is working on some way to streamline all of this. What needs to change in order to make sure that these disclosure requirements are effective? And I think that leads to sort of a secondary question of what role will the SEC in the United States and at the European Union disclosure requirements, is that the way it's going to go as opposed to something that the UN does? Arlene, maybe I'll start with you on that question.
Well, I think it's a great question because I spent 20 years actually working in an environment in the EU where it's a total acronym soup for everything you can imagine. And I think the important issue here is that policymakers firstly need to be able to explain the benefits of adopting these policies. You don't need to have an acronym to do that. You need to see top-down transformation, for example, of disclosure in companies, that boards take that on board, that the C-suite takes it on board. But I think that what we always say about TCFD, the Task Force for Climate-Related Financial Disclosures, is that we did that, it was designed by the market for the market. That's why I personally think it's been a success, because business has always been on board with it. They've seen the business advantage to them for it. But now we've really embedded it in the public sector, in the sense that we've seen, policymakers adopting it. And so it doesn't really matter what you call the end result in this. We just need, as you said, Amy, very effective global disclosure systems and disclosure frameworks. What we say in Bloomberg is, look, we think it's a framework. It can be the backbone of a global standard, of global standards. We think there may be differences, but minor differences between different jurisdictions. But the key issue, and I think that this was also mentioned by Ken, is that the core elements of any disclosure regime have to have a number of key outputs, and that is material. It has to be material to the climate risks that are faced and the threats that are faced. The reporting has to be coherent, consistent, and comparable, because whenever we designed, and I did actually do the very first European disclosure and reporting regime in 2016 when that came into place, the problem with that was that there were 200 standards around and 200 options for companies, and so companies chose what for them made them look good, and that didn't help investors. Investors could not choose which companies they thought were going in the right direction towards resilience and sustainability. So I think what we've achieved now was TCFD, and that's why we say we don't think it's a silver bullet, but we do think it's the backbone of an effective global standard, disclosure regime. And I think what will be really a big game changer here is when the European Union, 27 countries, bring in a mandatory disclosure regime, a law, which will be mandatory. It'll be the first jurisdiction for that many, for a continent to go for mandatory disclosure. That will be a big game changer. And I think that the rest of the world will begin to look at that with interest. And again, what we're very happy about is that TCFD is the backbone of that. It won't be the fundamental, not everything TCFD does will be in that legislation, but the core elements to make sure we have global standards will be in that law. And that's what matters to get it in global regime and to actually moving capital in the direction of sustainable investment opportunities, both here and in the developing world, because many of the developing countries are also adopting TCFD. So I think, again, I started out in this way, but I am optimistic. I think that we're going in the right direction. And I'm personally very pleased to see that companies are stepping up and business wants to be a part of the solution and find, the right kind of outcomes so that we drive sustainable investment.
Arlene, just a quick follow-up to you is, what do you make of the forthcoming regulations by the Securities and Exchange Commission in the U.S.? What role do you think those will play?
Well, I think they're going to be also fundamentally important, and I think it's actually, a great feather in the cap of the Biden administration, and indeed of Gary Gensler, who, by the way, I've also worked with in the past when he was a CTFC chair. Is that they really, they're really embracing disclosure. They understand the value of it in terms of what investors are now looking for. But in the end, it doesn't really matter in some ways what whether the SEC does this, whether the EC does it, because the bottom line is that's in response to what investors are demanding. We're certainly seeing in Bloomberg, in the ESG space, an enormous appetite and demand for this kind of information. So in reality, regulators, supervisors have to go in this direction because it's what investors want, and investors will not put their money anymore, particularly not just since the global crisis, but since the pandemic. They don't want to take risks, and they're not going to take risks on climate issues. So we do need to provide this information, and regulators need to provide the framework for companies to be able to provide that information, as I said, in a consistent, comparable, and coherent manner. And I think it's quite simple, and I do think that it can be achieved globally, and we can have a language there, not an acronym, but a language of reporting that companies buy into and that investors understand.
Can I come back to that?
What's your yeah, Ken, go.
Yeah, if you don't mind. Yeah, so we might have a slight difference of opinion on this a little bit, but we're supposed to make this exciting, so I'll make it a little exciting. I heard last week that there were all these different reporting frameworks, and they're a bit like a toothbrush. Everyone wants one, but everyone just wants to use their own. And I think what we're seeing here is, it's very difficult to come up, in my view, with clear and consistent disclosure rules. And if you think about how the SEC conceives of its obligation, it's really to protect investors, to maintain orderly, fair, and efficient markets, and to facilitate capital formation. And what's happening now, kind of driven by all these other regimes, is whether the SEC now expands that. It's either an expanded view of what's material, and climate and ESG is viewed as material, or it's kind of an additional non-financial explanation of risk. And to do that in a way where we don't yet have the data is very, very tricky. So I agree with Arlene's comment, which is that we need to have better, consistent, verifiable disclosure. But I think we go down a risky path that is really potentially leads more to litigation risk for disclosing parties than to real gains if it's not done right. It's going to be very interesting to see how the SEC reacts. I mean, they're making all the noises that Arlene mentioned, but I think that there's a real focus on what's workable. When the SEC comments on a new registered offering, on a new IPO, on a company's annual statement, what kind of clarity can they give the market around the information that's being provided so that companies can really be compared apples to apples, oranges to oranges, across markets, across sectors? And what a number of my clients are really worried about is that those that have a global presence are going to be exposed to differences. So while I agree with Arlene that it'd be good to have one global standard, I'm not really that optimistic that there will be. And I think that a number of companies and financial institutions...
That's exactly, yeah. Ken, where TCFD offers something that's sector-specific. Yes. It can be adapted. And I have to say, your argument, sadly, is the argument that many businesses use to say why they can't disclose. And if we have that argument from business, we're never, ever going to get to mobilizing the trillions of private capital that we need to invest in sustainable investment and to get that out to emerging markets. So, I think that business has to come on board with this. We are trying to design systems for them, and I think TCFD is effective at that, of saying if you're in the oil industry, your reporting regime will be very different if you are a big consumer of electricity because you're Apple or because you're Microsoft. So, we're recognizing that there are differences in sectors, and I think TCFD is effective at that. But I think, we won't have one global standard. We will have a core set of global standards, and there will be different reporting regimes around the core standards to enable sector-specific and jurisdiction-specific differences. And I think business will have to live with that if they want to play a significant role in mobilizing capital.
And I agree. I mean, that's what's going to happen, but I think it's going to be a little bumpy until we get there.
But we always have bumpy rides to get to the right place.
Yeah. True enough.
Just a word to add to this very complicated matter. As a user, I must tell you frankly that I don't exactly know where we are. I think it's very important that we can converge. And when I see the IFRS process and in Europe, the EFRAG process, and where all this is going to converge, I would like to be very optimistic. Not sure I am completely, to tell you the truth. This one thing is clear. The one-size-fits-all approach will not work, and I support, obviously, the idea of a sectorial approach. One. Second, I think for the lenders and for the banks and for the debt, generally speaking, these are very often pretty sophisticated people, so they know what's going on. If we can give reliable data, can be verified, and also that they can demonstrate that within the companies things are properly rolled out and so on, this is workable. Where it comes a bit more tricky is indeed on the equity markets. And here, if we don't understand what happens, if the investors are not easy with it, what's going to happen is that the proxy agencies are going to give the answer for everybody. And at the end of the day, we could be in a situation where 2 or 3 global agencies have a very, very strong power on all these matters. So this is a kind of a practical approach I have. And obviously, I would support 100% a sectorial approach, which would make sense.
Is this something that needs to be done primarily by governments? I mean, TCFD is obviously not a government agency, but is this the type of thing that will ultimately need to be done in different approaches, but always by governments or institutions like the UN or the IMF?
I mean, the governments regulate markets, so I guess it would, maybe it's a combination. You're going to have to, for this to really work, you're going to need to have ultimately some kind of consistent framework so that investors know what to expect, governments know what to expect, companies and financial institutions that are making disclosures know what to expect. And so, it could be that you have widespread voluntary adoption of some of these standards. In fact, you're really already seeing that. But the question becomes, at what point are we able to impose liability for improper disclosures? And frankly, there needs to be that because, we can't have public institutions making claims that aren't verifiable. The question is, what's the path? What kind of predictability do we have? And so that's why it's so important that there's so much focus on how we do this now.
Wouldn't it be, only a government could really impose a penalty, right? You wouldn't, it seem like any other institution or something like the IMF.
Yeah, but, Amy, that's not the approach that I think we should take to this. I think that, when we started off with designing the regime of TCFD, the reason we pulled together companies and businesses to do with that was because we wanted them to inform us and show us the way that they could go on this path with this. I don't think it's a good idea for rules and regulations to be imposed top down by governments if they don't understand, I think, the point that was made very well, that companies have to think about their own specific sectoral problems that they have or the sectoral pressures they have in terms of what are their climate threats or climate risks that they have internally. So I think we wanted to work very closely with business to do that, which is why it was largely a voluntary approach, and it was an approach that was endorsed by the Financial Stability Board as being the right way to address climate risk. But I think what other people agree with is that once you get to the stage where you have allowed the private sector to really shape and influence that regime, at some point, and that's a tipping point, and that's a tipping point that probably is coming out of UN COP, if you really want to scale that up and get to the critical mass where investors are prepared to put, trillions of dollars into those kind of investments for us to meet our climate obligations, then you will have to have, regimes that are handed down, that are mandatory, that are government. And I don't necessarily think you need to talk about liabilities here. I mean, when I myself did legislation on the transparency regime, we didn't force that to be something that was audited. We could have done that, but we thought that was too expensive for companies. We said, look, you do an annual report, you, the board, take responsibility for that. So that's why we always say TCFD and disclosure has to be a board responsibility. Because if the board takes responsibility for that, we should avoid a situation really where, there is a liability or a prosecution by a government department, because the board itself, I would think, to its investors, if it wants to be seen as a good investment and in a sense, a resilient company that investors are going to put their money, then they're going to do that responsibly. I have faith in responsible companies, and I hope I'm right on that. But I think most companies now understand the risks of not addressing climate change and not addressing, really effective disclosure and reporting. They know that they're not going to be a good option for the investment community. So I think that's what's coming together in a kind of, in a perfect way, that it is about self-aligned interest for the business community. It's in self-aligned interest because investors are not going to put their money in a bad bet with a company that's not addressing its climate risk.
I completely agree with that.
Thanks.
I mean, and that's right. That's right on the money. Yeah.
Great. I want to kind of climb out of the acronym soup that we've had this fascinating conversation. I really appreciate the back and forth that we've had. Just as a reminder, you can ask questions on the chat function. So please do that now if you would like in the last few minutes that we have. I do have a question that I would like to share with the group, and it's not directed to anybody in particular. So please, anybody who would like to answer it, please do so. How can we ensure that the green transition process is as inclusive as possible between and within countries and regions? We touched on this a little bit in the beginning, but maybe we can go a bit deeper. Would anybody like to take a stab at that one? Philippe, maybe we'll start with you.
Well, I have already a little bit addressed the point, saying that if you want to be very inclusive, efficient, and to the point, we are really to focus on some critical matters. We cannot be, we cannot be everywhere. And what is important for me is energy and the fossil energy that we have to take out, decarbonation of bulk materials as well. And for instance, if we know where we want to go, then we will find a financing to public and private to sort out these issues. But we have to do it very quickly. It's a matter of speed here.
Well, I mean, I feel, I've already probably spoken too much, but I think what I'm most excited about in this whole, inclusive approach to the green transition. At the moment, I'm supporting a project that Mike Bloomberg has funded over the last 4 years in cooperation with the European Commission, with Frans Timmermans, which is a global covenant of mayors for climate and energy. And so at COP, we announced that we've now got 11,000 cities covering 1 billion inhabitants of the planet who live in cities who have signed up actually to be a key part of the delivery of this transition and indeed the green recovery, as we call it, after the pandemic. But I think what's really exciting about that, if you think about energy, is how some of these cities now are embracing new technology. I mean, you're sitting, Amy, in Seattle. Seattle is one of our flagship cities, actually, that's embracing electric vehicle charging. But we've got other cities, for example, Rotterdam, that's designed a new clean heating network, Jakarta with green transport. So, I just what cities are doing for and with their citizens is phenomenally exciting. And that's the whole, if you like, virtuous circle of, yes, we need governments to go to UN COP and agree to sign up to, bigger ambition. But if we don't use the mobilization of private finance to put that into our cities, which are the biggest emitters in terms of climate, climate change, then we're not going to really, I think, make steady and good progress in a fast way. So, I happen to think that there are so many valuable links in this chain, right down from the citizen to the mayors that work on behalf of them in their local communities, to how they're attracting investment in, to how some of these cities are pioneering really ambitious climate solutions. And that's where I think, we have to put a lot of our support into growing those kind of ambitious projects. And as I said, Bloomberg's invested significant amount of money in doing that through philanthropy, through our philanthropic foundation. But we're doing that in conjunction with the European Commission that's also invested globally around 50 million in these projects. So there's lots to be done. And we can do it in an inclusive way, working together across the whole of the value chain, right from business to governments, to local communities, to municipalities, together with citizens who you saw in force in the UN COP out on the streets demanding that we do more. We can do that together. And I think, that doing that with cities who have not the money, they don't have the money to do it, but they are able to design really exciting projects. If we put our money in there, I think we're going to see a big impact in the next 5 to 10 years.
That's great. And Arlene, that actually, sorry, what was that?
Just to add to what has been just said on the cities, there is one specific matter as far as materials are concerned, which is the mining issues, because lithium, nickel, or rare earths and so on, or cobalt, are generally speaking emerging countries. And it's absolutely critical that we can deploy the most available green standards, so that indeed we don't make the success of EVs or whatever infrastructures in developed countries built in efforts of mining, which would not be supported by local communities. So we have this smart cities example, but I think on the other side, the mining one is also a very interesting one.
That's great. And that's actually, you guys are helping answer preemptively a question here from the audience, and maybe I'll just ask it, and then Ken, it would be great to get your perspective on this. On the key role of local governments, cities and regions tend to have more ambitious commitments and accountability mechanisms, yet they're mostly absent. Why, and how best should we engage them? In the last final few minutes, Ken, do you have a perspective on that?
Well, I think, as Arlene pointed out, I think they are engaged. Even, for example, New York City, where I work, they're completely focused top to bottom in particular on, building efficiency and preparation in case of a storm, and the other community, which I spend a lot of time in Charleston, South Carolina, there's also a particular focus on these same issues. So I do think that actually they are present. I think that they, depending on where they are in the world, they have limited resources. I think, the issue of inclusiveness has been a real issue with this COP, particularly the level of involvement and kind of effective or controlled participation, their ability to influence the outcome from some of the less developed countries and those that are really, like Fiji, for example, just are really going to be impacted by and already being impacted by the impacts of climate change. And I think, it's not a question of charity to enable them to participate, but it's actually in all of our benefit to make sure that they're playing a role and are kind of at the table. So, I don't know how fair the criticisms are that this year's COP has not been inclusive, because it seemed to be, at least by comparison to past ones. In fact, it was quite inclusive, but I think that making sure that the affected communities, whether they be cities or rural areas or countries in the north or in the global south, I mean, I think we all have an obligation to make sure that they have a seat at the table.
That's great. I want to have a final question, what I like to call a lightning round, where I ask each of you to relatively briefly answer the following question, which is, what's a clean energy technology that you're particularly excited about that could have a transformative impact on our clean energy transition? Arlene, maybe we start with you.
Well, I don't think there's not a single technology, but I think that if I look to our experts at Bloomberg New Energy Finance, they see a series of technologies, which is exciting, where the costs have fallen so far and so fast that they are beginning to have a transformative effect. So if you look at solar, the costs of that have dropped 85% in the last year's wind, 40%. That's helping to transform the power sector. If you look at battery costs, fallen by 89% in the last 10 years, that's helping to transform the transport sector. So we're also seeing similar cost falls in electrolyzers for the production of hydrogen. So I think that, we're going to see, and I think that was already mentioned, that that's going to be good for steel and shipping. So I think the rapid fall in costs is going to really be exciting in terms of harnessing those technologies across a range of sectors. And if that continues, I think, again, I want to end on a note of optimism. I think that we can do great things with these with many technologies.
Great. Thank you so much, Arlene. Philippe, what's your perspective on this?
Like Arlene, I have not one technology, but basically in World Materials Forum, we have a special session on the top 10 technologies. But if I extract, most important is one, batteries. It's about performance, it's about recycling, it's about mobility batteries, but also about stationary batteries that will be very useful for the electricity coming from the wind farms or solar panels. So this is one. The second one is definitely hydrogen. Hydrogen is not one technology, it's a system from production up to, say, decarbonation of industry, also mobility. So the hydrogen system is a very important part. And the third one has not been mentioned, but is very important. We all think that digital is part of the solution. That's great. But we should not think that digital is CO2 free. It's going to be probably in 2025, 7% of global emissions. So technologies that will improve the speed of computation, be it spintronics or quantum computing with AI, this is very critical. And because I would conclude on this question of technologies, I'm French, and the country has built a very strong nuclear system which is CO2 free. We only emit with nuclear 16 grams of CO2 per kilowatt hour compared to coal, which is at 600. So it's a very important asset, and we should not throw away nuclear electricity. It's part of the solution.
Great, thank you, Ken. In less than a minute, what would you say is one clean energy technology that you're excited about?
Well, cement, it sounds, like if we can change the way we build roads, bridges, buildings by using more efficient ways of making of cement, and the new technologies are out there, it could have a massive increase or I should say decrease in carbon output. And then the very last point in 10 seconds, I've always been against nukes, but my opposition is dissipating quickly. And I'm really coming to the view that nuclear is going to have to be part of the solution.
That's great.
Great. Well, that is an optimistic and interesting note to end on. I do want to thank the panelists for this insightful and exciting conversation. And thank you to everyone joining wherever you may be. And thank you to the Paris Peace Forum for convening us. And I hope everyone has a great rest of your day and evening.
Thank you.
Bye. Thanks very much.